$2 million vanished in an instant. Instead of abandoning the project, the team scrapped their entire smart contract and rewrote it from scratch. That leaves us with a difficult question to answer. We need to figure out if that massive security breach is a permanent warning sign or the start of a resilient recovery. The asset at the center of this is OLAXBT, trading as AIO on the BNB chain. The platform aims to give everyday retail users the ability to build and deploy their own automated AI trading agents. The main draw here is accessibility. You do not need any coding experience to configure these agents and set them loose on the market. When you combine a severe technical trauma with accessible consumer tech, you get a polarizing asset. It is a setup that requires us to look very closely before putting any capital at risk. The engine running these agents is a modular system called the Model Context Protocol. This animated diagram illustrates how the protocol aggregates information. It pulls in real-time on-chain data, specifically tracking whale movements. It filters those movements alongside macro market indicators and social sentiment signals to spit out a clear action signal, spotting opportunities early. The developers building this system have deep roots in traditional finance, bringing experience from both investment banking and hedge funds. That professional background paid off with a major institutional win. In August 2025, AIO secured a spot on the Binance Alpha discovery list. Securing backing from the largest exchange creates a very strong setup for short-term momentum traders who follow tech narrative cycles. But a working product and a credible team on paper do not automatically make for a safe investment environment. We have to look at the token structure. This pie chart shows total distribution. The foundation is a strict max supply of 1 billion tokens with no future issuance. Currently, only 230 million are circulating. The problem is the remaining 770 million locked tokens, creating a massive, looming supply overhang. When those scheduled unlocks hit the market this year, the sheer volume of new supply threatens to heavily dilute early buyers' holdings. To combat that inevitable sell pressure, the platform offers automated staking vaults that pay out yield. The goal is simple: pay users to lock up AIO tokens, restricting the immediate circulating supply. However, choosing to stake means you have to trust your funds to a smart contract ecosystem that has already suffered a $2 million failure. The marketing leans heavily on the appeal of automated AI trading, but the actual tokenomic structure is far less forgiving. For long-term fundamental investors, buying in now means stepping into a massive inflation trap that is currently disguised as a high-yield tech play. The market initially ignored that future dilution. AIO launched in August 2025 and immediately caught momentum. This line chart tracks that early performance. By September, the price spiked to an all-time high of 20.5 cents. Hitting that peak confirmed early product market fit and showed traders buying into the Binance Alpha listing. But that high was short-lived. The token plummeted 44%, trading today around 11.5 cents. Despite giving back half its value, sentiment remains bullish. The critical level to monitor is this horizontal support line at 9.5 cents. If the price breaks through that floor, buyers step directly into the path of a falling knife, with no clear historical support below it. We are looking at a classic post-hype reality. Initial momentum has faded, and the structural gravity of incoming unlocks is weighing heavily on the price. So we are left weighing two very different realities. On one side, AIO offers a legitimately innovative, no-code AI trading tool built by a highly experienced team. On the other side, any capital deployed faces the dual threats of a 770 million locked token overhang and the historical precedent of a multi-million-dollar smart contract failure. This matrix plots risk against reward. Based on the facts, we are assigning this asset a strict watch status rather than a direct buy. For a short-term trader, playing the momentum off the Binance Alpha narrative can work, provided you manage your risk tightly and respect your stop loss. But for a long-term investor, locking up your funds to chase staking yield is a mistake. The rewards simply do not outpace the severe dilution coming from the